New chair, familiar decision. The Federal Reserve keeping interest rates steady, but giving clues about how new Federal Reserve Chairman Kevin Warsh may steer things moving forward. Karen Kaifa is in Washington with what it means for your household's current and future money plans.
New Federal Reserve Chairman Kevin Warsh breaking down the first interest rate decision of his tenure.
Members of the FOMC are unambiguous and unanimous. This committee will deliver price stability.
The announcement coming after inflation spiked to a three-year high last month.
Inflation's above 4%. It's almost impossible for the Fed to cut rates when the inflation is running at twice its target level.
As the war in Iran pushed energy prices higher and other pressures too.
You also have the continued massive amount of spending from tech companies fueling more of a boom in our economy than a bust, and that's an inflationary pressure. And then, by the way, we've got hiring picking up. So there's not a lot of dynamics to point to for Fed members and the chair himself to point to cutting interest rates.
But the job market is showing broader growth, and energy prices are falling after an initial agreement to halt the war between the U.S. and Iran. That places less urgency on the central bank to make a move in either direction. So consumers eager for cheaper borrowing costs will have to wait everywhere from credit cards to auto loans. And even though interest rates aren't directly related to mortgage rates, they do influence them. And high mortgage rates are cutting into supply, keeping shelter a sticky element of overall inflation.
People are just staying in their homes for longer. They're clinging to those super low mortgage rates. They're not moving at the same pace that they normally would.
Inflation has been a recent driver of consumer pessimism, according to consumer sentiment surveys. In Washington, I'm Karen Kaifa.